Now you got the new study material I shared today,
Yes, sir.
and the topic is Foreign Exchange Management Act 1999. As such, quite a vast act, but for you, limited things are applicable. We have certain provisions of the act. In the act, we will refer section 2 to section 15 broadly. We can omit some of the sections in between. Then we talk about capital account transactions. Then current account transactions. Actually, this is the crux of FEMA. What is capital account transaction? What is current account transactions? And what are the limitations thereon? These are transactions. These are not bank accounts. So when a transaction is entered into or likely to be entered into in foreign exchange, then we have to understand whether that transaction will be a capital account transaction or it will be a current account transaction. And accordingly, limitations are given here. Now, even before I start about FEMA, let me tell you something that this law, FEMA, this is not for common people, not for common people. What do you understand by this line? It is as simple as if FEMA does not exist for a common person. Why it is so? Suppose tomorrow you have a plan to visit abroad, maybe as a tourist, right? How much amount you can invest on that foreign visit? 2 lakhs, 3 lakhs, 4 lakhs, 5 lakhs, 6 lakhs, isn't it? How many people in India can spend more than 10 lakhs rupees per year on visits abroad for holidays? Only for holidays. If you're going for business, no limit. If you're going for education or medical, no limit. But how many people in India can spend more than 10 lakhs per year only for holidaying abroad? Not even 1%. Right? So for 99% people, FEMA does not exist. Okay. So tomorrow you want to visit abroad and you want a $5,000 in foreign currency. Directly go to the bank and that is debit. Your saving account is debited and the dollars are issued to you. You wouldn't even know that FEMA provisions are applicable on that. It is so simple because it is not for common people, or you can say so many exemptions are given or the limits are set so high so that the provisions are really not there for a common man. Okay. Now, in this, what is most important is what is called foreign currency, what is called foreign exchange. These are definitions which we are going to discuss in detail. Foreign currency, foreign exchange, then person resident in India, person resident in India, then capital account transactions, current account transactions. These all definitions we are supposed to go through. Okay. So let me start the concept with the first definition, person resident in India. Because provisions of FEMA are mainly for person resident in India. Okay. So first definition which I'm explaining, that is person resident in India. And this definition under FEMA is relevant only for FEMA, not for any other law. The same word is defined differently under the Income Tax Act. Person resident in India carries a different definition under the Income Tax Act. So please understand the definition given under FEMA is relevant only for FEMA. Is that clear? Okay. Now I will use the word PRII. This is a person resident in India. When we go in the definition, you will find that the definition is broadly divided in two parts. First part is meant for individuals, and second part is meant for other than individuals. So by the title itself, it is clear that when we say person resident in India, we are not talking about individuals only, right? So person resident in India may be individual, may be other than individual. So who else is covered in other than individual? This may be HUF or partnership or association or trust or company or corporation, whatever name you give. But every kind of setup other than individual will fall under this category. Right. Another important thing is that the residential status of individual can change, but the residential status of any person other than individual, that cannot change. Okay, so here I'm adding residential status changes, and in this case no change in residential status. There will not be any change in the residential status of other than individual. Right? In a definition, you will find 4 clauses. How many? There will be 4 clauses. So in this, we have clause number 1. And here we will have clauses 2, clause 3, and clause 4. I'll go on the definition later. Right now, I'm giving you just the structure so that it becomes easy for you to understand the definition. In clause 1, again, there are 2 parts. A and B. A means when a person resident in India ceases to be person resident in India. Somebody who is already resident, what point of time he will cease to be person resident in India? Right? In this case, when a person resident outside India See the word PROI, person resident outside India. Here we have person resident in India. So when a person resident outside India becomes person resident in India. So this is only the structure of the definition of the word person resident in India. Okay. And this term is defined under section 2, clause B. Under section 2, clause V. Person resident in India. Okay. So have you understood this structure of the definition? I haven't shown you the definition till now. I said in the definition broadly two parts. Part 1 for individual, part 2 is other than individual. In part 1, there is only one clause, but there are two subclauses. Subclause A, subclause B. In subclause A, you will find when a person who is already a resident in India ceases to be a person resident in India. And in clause B, when a person resident outside India becomes a person resident in India. Because it is only individual whose residential status can change. Other than individual, I said this may be partnership firm or HUF or association or society or cooperative society or trust or company, whatever it may be. Everybody think about covered this. Their residential status.
To watch full video, join the YouTube membership plan.